For a closer look at what's playing itself out in that market scene is Faheema Adia from Momentum Securities. Faheema, always a pleasure. Good afternoon.
Afternoon. Thanks for having me, Alexander. Good to be back.
Wonderful. Good to see you. Lots happening in the world. We do see European screens are not quite as buoyant as the JSE today. Another day of rallying on our local bourse. Keen to get your thoughts on overall sentiments at this point.
Yeah, so we see the momentum continue today from yesterday. Yesterday, of course, was a really great day on the JSE, up more than 3%, which is quite a record. And it just seems that rally is just continuing this morning. We've now seen the JSE go above that 80,000 mark. So I think that's just mostly been driven by the outcome of that election and the government of national unity, which largely will include the ANC, DA, and IFP. And I think the market is just really liking this. It's seen as a business-friendly union, and it's just given the market a lot of confidence, I think. And there's just now, they're basically taking this as an opportunity to basically buy a lot of very good companies on the JSE that has been undervalued for quite some time.
I'll tell you, Faheema, one of my concerns here about this GNU rally, it's what I'm calling it, is the fact that it's very possible that markets' expectations are not quite clear. And as a result, we could actually see a sell-off at some point if markets don't know what these expectations are and if those expectations will be met. I'm wondering if you're able just to assist us with what exactly it is about this specific, a permutation of political parties coming together that is giving markets so much hope.
So I think what the market really hates is uncertainty. So at this point, it's just the certainty that is really giving the market the confidence, and just a specific coalition, and unity. It's unlikely to result in any major policy shifts or any negative policy shifts going forward. We also expect to see, the government continue with fiscal consolidation and tightening its fiscal position, given, who they've partnered with, which will obviously be good for the country and also for our growth prospects going forward. I mean, if we compare it to the alternative scenario where we could have seen a union with the likes of the EFF or the likes of the MK, I think that would have been perceived in a lot more of a negative way, given the drastic policy differences there. But for now, it seems, there isn't going to be too much change when it comes to policy changes. It's kind of going to be business as usual. And it just seems that, having the involvement of the DA could just be positive for the government as well. So all in all, I think it is seen as favorable.
I want to also stay with macros, maybe going to the US now. The US retail sales came in up 0.1%. I think that shows a bit of a cooling. Keen to get your thoughts here on how it all plays out to conversations around the strength of the US economy.
Yeah, so I mean, it did come in a bit weaker than what the market was looking for. The market was expecting 0.2%, and it seems the weaker result was basically just driven by lower fuel prices, given the moderation in the oil price. But it is, like you say, positive to see that that is coming off. Retail spending is coming off in the US. It will be positive for inflation, and that could then help the Fed get the confidence that it needs to start with some of those rate cuts that the market is really looking forward to.
I want to get into some company news now. Today, FMCG company Libstar out. They seem to actually have done pretty okay over this period. It always hasn't been, good, positive, high numbers for Libstar. But this period, I think, considering the macros, they've managed to do well.
Yes, I think it was a decent trading update. The revenue increased there by more than 4%, and it was good to see the gross profit margin has been sustained from the last period. The market responded pretty well to the update. I see the price was up almost 5% on the back of that. And I think what the investment base is liking now is the fact that the reorganization of their operating structure and also the new category growth initiative is starting to really yield results. So that new category growth initiative was launched last year. It includes that dairy and wet condiment category, and that's performed quite well. So on the local side, while demand was a bit subdued, that was offset by stronger international performance. So I think all in all, it was a decent update showing a turnaround.
Another one that I'm keen to get your thoughts on here is Stadio. They really are just going from strength to strength. Well, I guess education just is that defensive, isn't it, Faheema?
Yeah, so it was actually a very impressive result to see that they were actually able to grow student numbers by 8%, given the very difficult macro backdrop we're experiencing and a consumer that's under increased pressure. And I see it was quite interesting to note that both contact learning and distance learning numbers have increased quite significantly. And they say they've been experiencing such a huge demand for the return to campus that they've actually had to complete the building of the Durbanville campus, which is expected to be completed in 2026. So yes, I think it was a very good result given the very difficult macro backdrop.
Also, a lot happened yesterday, but maybe what didn't get a lot of attention, I want to get your thoughts on it, is Thungela. They're out with a bit of a trading update, really guiding the markets towards a deep falls there in their earnings.
Yeah, it's quite a negative trading statement there. So expecting HEPS to decline between 55 to 69%. And that's mostly due to that weaker coal price and also the rail performance issues they've been experiencing with Transnet. So if we look at the Richards Bay coal price, that's down almost 18% from last year. So what's basically driving the lower coal price has been the fact that the European and Asian winter hasn't been as bad as what was expected. It hasn't been as cold, and that's resulted in some stockpiling, which still hasn't completely been depleted. So in terms of the outlook for the coal price, I think it's still looking pretty negative at the moment. And yeah, given that, and also in combination with the railway constraints, I think that Thungela is facing quite a lot of headwinds this year.
That said, I'd like to get your stock pick for him, but first, let's take a look at counters that have found favour with your industry peers.
We're going with capital appreciation. It's a smaller cap stock, so it hasn't really been the beneficiary of the rally yet, so you can still get in. An investment holding company and exposed to the payment sector and software. The numbers look really good. Their results came out recently. It's come a decent dividend. The underlying assets are solid. They've got a lot of cash on the balance sheet, and I think you're getting growth in quite exciting sectors in the tech space at a very reasonable price still here. So that would be our pick.
I'm going to stay with this SA Inc. rally and look to the sort of mid-tier space, and I'm going with Curro, which is obviously in the education space. It hasn't followed the rally that we've seen in some of the sort of more liquid stocks, which talk to the banks and some of the retailers. You know, just looking at the valuation of Curro, I think it still is very cheap. They've kind of communicated to the market that they're going to keep business simple, make sure that revenues are collected, make sure that their schools are full, you know, not going to run on this grow by acquisition strategy, which it did previously many years ago. And I think if they do that, you could probably see a decent re-rating. It's not going to take a lot to see the share price move from kind of 10 Rand 50 odd where it is at the moment, back up to 13, 14 Rand, just on a simple re-rating.
I'm going to pick LVMH. So yeah, we've got like a nice little pullback. You know, luxury goods retailer. We did see those retail sales coming a little softer in the US, but yet we do know that interest rates are going to be dropping over the next sometime. Definitely, I think definitely. I can't say definitely, but probably one, at least maybe two interest rate cuts in the US. Obviously, very reliant on China and that, but. I like the idea of you know, kind of the more consumer discretionary stocks, but I think this early in the cycle you probably want to look at something a little bit more defensive. So LVMH, obviously luxury goods brands, a huge diversified portfolio of products, you know, really solid backing, nice technical pullback at the moment. You know, it's always expensive. It's never going to be cheap, just like it's goods. But yeah, I think worth adding to international portfolio.
All right, Faheema, we have capital appreciation, Curro and LVMH. Keen to get your thoughts on some of those counters.
So if we look at LVMH, I've had a look at it recently, actually, Nolitando, and yeah, I think from a valuation point of view, it does look attractive. I might probably wait to see some more recovery in China before looking to invest in the luxury segment, because they're, of course, a very big market for the likes of luxury stocks like LVMH. But I think a lot of growth in the luxury sector is expected to come from places like India going forward, which I think could help offset some of the issues from China. The other one you mentioned, sorry, I didn't get the other two.
Capital appreciation and Curo.
So I haven't looked at capital appreciation recently, but if we look at Curo, yes, this is a good SA Inc. education stock. And they obviously had some struggles after COVID, and there was a bit of a decline and flat learner growth for a few years after that. But we are starting to see a bit of a bounce back. I think at the current valuation, it is looking attractive. And hopefully, once we see some interest rate cuts come through later this year, they will be in a better position to grow their student numbers, especially in the primary school levels, which I think has been experiencing a lot more pressure in comparison to the high school.
With that said, which counter are you loving this afternoon, Faheema?
So I'm looking at African Rainbow Capital Investments. I like this one because of its investment in TymeBank in particular. So TymeBank is, of course, one of South Africa's leading digital banks. It's now serving almost 30% of the South African banking market. And it's made a lot of progress over the past few years since it's launched, recently becoming profitable. It also has a presence overseas in the Philippines, and they've also got ambitions to expand into the wealthier segments of the market. So it will be exciting to see what comes from that. And they've also said that they would be looking to list in the next few years, potentially in New York and also on the JSE, given that it is private at the moment. So I think a lot of growth could be unlocked from that in the long term. And then if we look at African Rainbow Capital's other investments, such as Alexander Forbes, as well as Rain, that has also been doing quite well. So the company is trading at a discount to its NAV, and I think it definitely looks quite attractive at current levels.
Wonderful, Faheema. Thank you for joining us today. Great to have you back with us. That was your Midday Markets Update with Momentum's Faheema Adia.